Good morning, trading world. It is August 23rd, 2022, 7:37 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. Well, in one day of trading, we broke the lower edge of the weekly expected move. It took a lot of energy to do that, so the market may need a little recuperation or consolidation time before anything else significant really happens. Now, looking at the VIX futures and spot VIX, there's still a big difference between the two, which to me means there is still more expected sales activity to come. The lower edge of the market maker's expected move is around 413. So keep in mind that if we break the buffer zone below that level, then professionals have to come in and dynamically hedge by selling S&P futures into more selling. And this could sell us into a bottomless pit. For now, energy will have to build up through the 30-minute, hourly, up to the 4-hour before we can begin to move big again. So be careful, because we are literally sitting on the edge of a cliff. I still have a gang of short positions that I am in with little to no risk because I rolled most of everything out and down yesterday. So I find today is much to do about nothing. Until we close above 416, 417, I can't really think about renewing shorts. And until we close below 410, I can't think about selling premium. So it's really not much to be done today until those things happen. So with that, let's get into the key levels of the day. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 413 to 414 area. Then we have our queen resistance 415 to the 416 area, and then king resistance 417 to the 423 area. On the support side, we have our jack support 412 to the 411 area, queen support 410 to the 409 area, and then king support 408 to the 406 area. The main thesis for today is bullish, closing above the 413.35 with a projected target high of between 414 and 417. Our alternate thesis is bearish, closing below the 413.35 with a projected target low of between 413 and 408. The current major channel we are in is 416 all the way down to 397. Yesterday, the actual continued weakness or weak momentum surprised me a bit. Today, there is a want to get off the mat and cover some shorts and imbalances above, but it may be really sluggish in doing so. In all the excitement yesterday, I did not go over the weekly outlook. The weekly outlook is slightly bearish, closing below 422.14 with a possible retracement up to around 426. Possibly. And I want to reiterate that. Possibly. All right, with that, let's get us into the scenarios of the day. All right, here we are with our first scenario, and most probable is our range day structure. We could look to chop back and forth in a small but expanding range, building up energy for the next move. So as you can see, pretty much all night we have been in a very, very tight range. At some point in time, I expect for this range to start expanding, but we're going to still be in a range day type pattern. And what I mean by expanding, we're going to push the boundaries. So in a regular range day scenario, we usually set an upper boundary and a lower boundary, and you could almost draw a line through a middle, and this is where you trade. When I'm trading futures and I see range days like this, I try to take positions or find the resistance at the top of the range, and I trade back to the middle. And then if possible, I let a runner run past the middle, but I take off a majority of the position once we hit the middle part of that range. We'll set a boundary or top area or boundary low area, and at some point in the day we're going to start pushing that boundary out. So be on the lookout for that. I don't expect it to really take us a really long time to kind of build energy up as it has before, because I think a lot of retail investors have or are going to kind of throw in the towel pretty easily if we see any more selling activity. So it's not going to take long for it to drop or volume to kind of fall out on the retail side. So that's our first scenario. Let's get into the second scenario. Alright, our second scenario is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop either around the queen or king resistance before spending the same energy we use going up to come back down the second half of the day. There's also a vice versa warning on this. The vice versa warning will look like this, where we get a continued push lower toward the jack or queen support area, and then we look to find our midday chop around either the queen or king support area, and then the second half of the day we go up with the same amount of force that we went down with the first part of the day. So that's our rounded reversal day type structure and the vice versa warning on it. One of the keys to the rounded reversal day type structure: pay attention to your indicators. If you have a momentum tracking indicator, you should see a divergence almost right off the bat from price action. So if we're to start up, you're going to see price action, or actually your indicator, diverge from price action. So if price action is moving up, you're going to see a slight divergence down while price action is moving up. And so that should forewarn you that later on in the day that price action is going to catch up to the indicator by crumbling down. And the opposite is true on the vice versa warning. You should see the build up in the indicator slightly as price action is headed down. Let's get into the last scenario. Alright, our last scenario is our trend day up, which means we would open with a gap up and start after the cash open with a fade back toward the previous close represented by the blue line. We would find support on or before that previous close, then begin our uptrend for the morning, better known as our golden window, which is the best time to trade. We find our midday chop around either the possible queen or king resistance area, and it's likely coming out the second half of the day we see a head fake looking to continue the dominant trend of the morning, and then usually ends with a fade going into the close. It'll be interesting to see how big of a fade if we do get that. I also would like to extend a vice versa warning on this, since we are so close to the actual open that we could any news at all from the PMI and actually that's right after the close, so anything could kind of deter us to open one way or another above or below the previous close. So be on the lookout for the vice versa, which would be a trend day down, which would be really rare with the day that we had yesterday, putting those two type of days back to back. So those are the things to prepare for today. I hope this helps. Again, the most important job as a trader is to protect the capital that you already have, and we do that by knowing and understanding the risk that we put on in each position and managing that risk accordingly to our account size. So that should be it. Like I said, it's going to be a kind of dull day. Maybe a climb back up. For me, it's not worth trying to take the bull side of this because the risk is so great. But I'm just going to kind of let today play out and see where I can start to build positions again once this kind of plays out above the 417 or below the 410. All right. Wishing you a positive trading day. Have a great one.